The U.S. stock market stands as a beacon of growth and prosperity. Its resilience and upward trajectory cement its global financial powerhouse status. At the heart of the U.S. stock market's success lies economic dynamism and unwavering innovation. A deep-rooted culture of entrepreneurship. The U.S. fosters groundbreaking ideas that transform industries. From the invention of the telephone to the rise of the internet, American ingenuity reshapes the global landscape. The U.S. economy is flexible, adaptable, and open to new ideas. Businesses readily adapt to changing market conditions. The United States has long been recognized as a hotbed of innovation, where creativity and ingenuity converge to birth groundbreaking technologies. This culture of innovation is deeply embedded in American society, fueled by entrepreneurial spirit and a willingness to embrace risk. This commitment to pushing boundaries drives economic prosperity and the strength of its stock market. From the Industrial Revolution to the digital age, the U.S. leads in technological advancement. Innovation has created new industries and revolutionized existing ones, reshaping the global economic landscape. This dynamism reflects the American spirit of ingenuity, constantly seeking better ways of doing things. A robust ecosystem nurtures groundbreaking ideas, supported by research universities like MIT, Stanford, and Caltech. Collaboration between academia and industry fosters innovation, driving economic growth. The fruits of America's innovative spirit are apparent in the iconic companies that have emerged from its shores. From tech titans like Apple, Microsoft, and Google to retail giants like Amazon and Walmart, these companies have revolutionized industries and become symbols of American ingenuity. Their success stories highlight the power of innovation and adaptability. With global reach, they push the boundaries of what is possible. Apple revolutionized our interaction with technology. Microsoft's software transformed businesses and empowered individuals. Google's search engine democratized knowledge and connected the world. These companies are engines of economic growth, creating jobs and driving investment. Competing globally, they shape industries and influence consumer behavior worldwide. Contrasting landscapes, navigating risk and regulation. The U.S. thrives as an innovation hub, while Japan and Europe face challenges in economic dynamism. Cultural attitudes towards risk, regulatory environments, and tech adoption play key roles. Understanding these differences highlights the U.S. stock market's unique strengths. Japan's risk aversion and focus on stability can hinder rapid tech adoption. Japanese companies excel in automotive and electronics but may lack agility. Europe's stringent laws and social welfare can create barriers to entrepreneurship. These policies can stifle innovation and slow tech adoption. The U.S. benefits from a culture of risk-taking and a lighter regulatory touch. The enduring spirit. A nation embracing disruption and change. The U.S. stock market's success is deeply intertwined with the nation's cultural DNA. The American ethos, characterized by individualism, meritocracy, and optimism, fosters an environment where innovation is celebrated. Americans embrace creative destruction, dismantling outdated systems for progress. This adaptability drives economic dynamism and global competitiveness. Investors back bold ideas, supporting companies pushing boundaries. This spirit has fueled countless successful companies from the Industrial Revolution to the digital age. The U.S. stock market's success is rooted in the nation's cultural fabric, a testament to American innovation and resilience. The foundation of strength, deep and liquid capital markets. The U.S. boasts the most sophisticated and liquid capital markets in the world, a testament to its long history of financial innovation. This depth and liquidity provide a solid foundation for growth, enabling companies to raise capital efficiently and investors to easily buy and sell securities. A diverse range of participants ensures a constant flow of capital, providing ample liquidity for investors and funds for companies. This dynamic interplay is a key driver of the U.S. stock market's dynamism and resilience. The U.S. regulatory framework promotes transparency and investor protection, allowing for innovation in financial products. This has led to a wide array of investment vehicles, enhancing the attractiveness of the U.S. stock market. The depth and liquidity of U.S. capital markets are a cornerstone of its continued prosperity. A global magnet for capital, the allure of U.S. investments. The U.S. stock market's allure extends far beyond its borders, attracting investors from all corners of the globe. This global appeal is rooted in the perceived stability of the U.S. political system, the strength of its legal and regulatory framework, and the depth and liquidity of its capital markets. Investors recognize the U.S. as a nation built on the rule of law, where property rights are protected and contracts are enforced. This stability and predictability make the U.S. an attractive destination for safeguarding wealth. The U.S. dollar's status as the world's reserve currency enhances the attractiveness of U.S. investments. This global demand for dollars provides a natural buffer against currency fluctuations. The U.S. stock market's ability to attract foreign capital is a testament to its global standing. A virtuous cycle. Capital flows, fueling innovation and growth. The U.S. stock market's success is driven by capital flows, innovation, and economic growth. This cycle propels the U.S. to the forefront of the global economy. Abundant capital fuels research, new markets, and scaling operations. This access to capital drives innovation and creates new products. Companies grow, create jobs, and increase market value. This attracts investment, fueling the stock market's rise. The cycle of economic expansion continues. Guardians of trust. The role of corporate governance. Corporate governance ensures companies are managed in the best interests of their shareholders. Ethical conduct, transparency, and accountability foster trust among investors. The board of directors oversees management and ensures accountability. Independent directors provide objective oversight and protect shareholder interests. The SEC ensures accurate, timely, and comprehensive financial information. The SEC acts as a vigilant watchdog, maintaining market integrity. Ethical conduct and accountability are essential for long-term success. Integrity is a key differentiator for the U.S. market. A framework for confidence regulation. Fostering stability and growth. The U.S. has pioneered a regulatory framework balancing innovation and investor interests. This balance maintains market integrity and stability, attracting capital. Key institutions like the SEC, Federal Reserve, and CFTC shape this landscape. They enforce rules across securities trading, investment, and banking. Their mandate is to protect investors and promote financial stability. Transparency and disclosure are hallmarks of U.S. regulation. Companies must report rigorously, ensuring informed investor decisions. While praised for rigor, some argue regulation stifles innovation. Yet, the system adapts to challenges like fintech and complex instruments. The power of transparency. Illuminating the path for investors. Transparency is the lifeblood of a healthy stock market, fostering investor confidence and promoting market integrity. It ensures investors have access to accurate, timely, and comprehensive information. Publicly traded companies must disclose material information, including financial statements and significant events. This empowers investors to assess risks and opportunities. The financial press and analysts provide independent assessments, alerting investors to potential risks. This scrutiny ensures companies are held accountable and minimizes information asymmetry. The SEC's EDGAR database offers a vast repository of corporate filings and market data. This empowers investors to conduct research and make informed decisions. A global benchmark, setting the standard for market integrity. The U.S. stock market's reputation for strong corporate governance, robust regulation, and transparency sets a global benchmark. This commitment attracts foreign capital, solidifying the US dollar's status as the world's reserve currency. Investors worldwide value a level playing field where rules are applied fairly. The US consistently demonstrates its commitment to these principles, earning investor trust. This dedication to fairness and transparency is a cornerstone of the US stock market's success. As we delve into the role of the Federal Reserve, remember the US market's foundation of trust and integrity. The Federal Reserve, the nation's central bank, plays a pivotal role in the US stock market's strength. Tasked with maintaining price stability and promoting full employment, the Fed influences the economy and the stock market. Its monetary policy decisions can sway investor sentiment and shape the market's trajectory. The Fed sets interest rates and adjusts the money supply to influence the economy. Lowering rates encourages borrowing and investment, boosting stock prices. Raising rates can cool an overheating economy, potentially slowing growth and stock gains. The Fed's influence is often indirect, working through broader economic conditions. Cheaper borrowing can lead to increased investment and higher corporate profits. Investors may bid up stock prices, reflecting optimism about future earnings growth. The relationship between the Fed's actions and the stock market is complex. Market participants constantly analyze the Fed's pronouncements and economic data, forming expectations about future policy moves. These expectations can lead to market movements that anticipate the Fed's actions. The Federal Reserve's monetary policy decisions profoundly impact investor sentiment, shaping perceptions of risk and influencing investment decisions. When the Fed supports economic growth, investors take more risks, investing in stocks and other high-return assets. Conversely, a cautious Fed stance can make investors risk-averse, shifting to safer assets like bonds, leading to stock price declines. The Fed's communication strategy shapes investor expectations and market reactions. The Federal Open Market Committee releases statements after meetings, signaling future policy moves. These statements are scrutinized for hints about the Fed's economic outlook and interest rate adjustments. Fed officials' speeches and interviews provide further insights into their thinking and policy leanings. The Federal Reserve's task of setting monetary policy is a delicate balancing act, promoting economic growth while keeping inflation in check. These objectives can conflict, requiring trade-offs. When the economy is sluggish, the Fed may lower interest rates to stimulate borrowing and investment, boosting economic activity. This can lead to higher stock prices. However, rapid growth can accelerate inflation. The Fed may raise interest rates to combat inflation, slowing growth. This can lead to a decline in stock prices. External factors like global conditions and geopolitical events complicate this balance. The Fed's expertise helps navigate these economic currents. A global anchor, the Fed's role in international financial stability. The Federal Reserve's influence extends far beyond U.S. borders, affecting the global financial system. The U.S. dollar's status as the world's reserve currency amplifies the Fed's global reach. Fed's interest rate changes influence capital flows, exchange rates, and asset prices globally. Currency fluctuations impact trade flows, investment decisions, and economic growth worldwide. The Fed's role is crucial during economic uncertainty or financial stress. Its actions stabilize global markets, provide liquidity, and restore confidence. The Fed's influence highlights the importance of international cooperation among central banks. The demographic dividend, a young and growing population. Demographics play a significant role in the U.S. stock market's success. The U.S. enjoys a demographic advantage over aging populations in Japan and Europe. A younger population boosts the economy and stock market. More young workers mean a larger consumer base, driving demand. This demand leads to higher corporate profits and stock market growth. A growing workforce supports a larger tax base for infrastructure and education. Younger populations are more adaptable and open to new technologies. This drives new industries and economic expansion. New ideas from a younger workforce contribute to a dynamic economy. The demographic dividend requires sound policies and investments. The U.S. is well positioned to harness its demographic advantages for growth. Contrasting trends in developed economies. To grasp the impact of demographics on the U.S. stock market, we must contrast it with other developed economies. Japan faces a shrinking and aging population, leading to economic stagnation and lackluster stock market performance. Similarly, many European countries experience aging populations and slower economic growth. These demographic shifts present challenges like shrinking workforces and rising healthcare costs. The U.S., while facing its own challenges, is better positioned to manage these transitions. Proactive policies are crucial to address demographic imbalances and ensure economic growth. The consumption engine, fueling growth through spending power. Consumer spending drives economic growth and stock market performance. A young population boosts consumption rates, purchasing homes, cars, and other goods. This spending increases corporate revenues and stock valuations. Younger populations are optimistic and willing to take on debt. Borrowing fuels economic growth through significant purchases. Investing in the future. Demographics and long-term market outlook. Understanding demographic trends is crucial for long-term investments. Demographics offer insights into future consumption patterns and economic growth. The U.S. is well positioned for continued economic expansion. Trends can change due to birth rates and immigration. Investors must adjust strategies accordingly. Other factors like innovation and geopolitical events also impact markets. A holistic approach to investment analysis is essential. The dollar's reign, a safe haven in uncertain times. The U.S. dollar's status as the world's primary reserve currency strengthens the U.S. stock market. This status gives the U.S. a unique advantage in global markets. During economic turbulence, investors turn to U.S. assets, particularly Treasury bonds. This increases demand for the U.S. dollar, making U.S. stocks more attractive. The dollar's resilience was evident during the 2008 financial crisis. The dollar's status provides a buffer for the U.S. economy. Increased demand for U.S. assets helps keep interest rates lower. This supports economic recovery. The dollar's safe haven appeal underscores its enduring value. The U.S. benefits from this status, supporting its stock market. The dollar's strength is key to the U.S. stock market's growth. The U.S. must maintain economic stability to preserve this advantage. The dollar's role as a safe haven is crucial for investor confidence. The U.S. stock market's resilience is tied to the dollar's strength. A currency of confidence, the benefits of reserve status. The U.S. dollar's position as the world's leading reserve currency brings numerous benefits to the U.S. economy. It influences global trade, investment flows, and borrowing costs. The U.S. can borrow money at lower interest rates due to high demand for Treasury bonds. The widespread use of the dollar in international trade simplifies transactions. The U.S. benefits from a seigniorage effect, earning a premium by issuing the world's reserve currency. The U.S. must maintain economic stability to preserve this advantage. The U.S. dollar's dominance as the world's reserve currency faces challenges. Emerging markets and alternative currencies are rising. These shifts could erode the dollar's dominance. The euro and Chinese yuan pose potential challenges. However, the dollar's liquidity and stability remain attractive. The dollar's role in a multipolar world requires careful navigation. A legacy of trust. The enduring appeal of U.S. assets. The U.S. dollar's strength is intertwined with a legacy of trust. Prudent fiscal and monetary policies and a stable political system underpin this trust. Investors recognize the U.S. honors its financial commitments. This reliability fosters confidence in U.S. assets. A defining characteristic of the U.S. stock market is the emphasis on shareholder value creation. Shareholder primacy prioritizes shareholders' interests. Critics argue it leads to short-termism, but it drives growth. Companies focus on profitability and higher returns. This fuels innovation and wealth creation. U.S. companies demonstrate their commitment to shareholder value through share buybacks and dividend payouts. Share buybacks reduce the number of outstanding shares. This boosts earnings per share. Dividend payouts provide a steady income stream. These practices return excess cash to shareholders. The U.S. emphasis on shareholder value contrasts with stakeholder capitalism. Stakeholder capitalism considers all stakeholders, not just shareholders. Proponents argue businesses have a social responsibility. A narrow focus on shareholder value can lead to negative consequences. The debate highlights differing perspectives on business roles. The Buffett doctrine, long-term value creation and investor confidence. Warren Buffett advocates for long-term value creation. His philosophy centers on companies with strong competitive advantages. Investing long-term builds wealth for shareholders. Buffett's focus on shareholder value earns global trust. The enduring strength of the U.S. stock market. The U.S. stock market's success is the result of innovation, a robust financial system, and a commitment to shareholder value. This ecosystem fosters long-term growth, making it a beacon for investors worldwide. The U.S. adapts to economic changes, embraces disruptive technologies, and supports thriving businesses. A strong legal framework protects investors, ensuring market integrity and confidence. Despite short-term volatility, the U.S. stock market's long-term trajectory reflects economic strength and resilience. This resilience is a testament to American businesses, workforce ingenuity, and sound economic institutions. The U.S. stock market's enduring success highlights the power of free markets and innovation. Navigating uncertainty, embracing opportunity. The global economic landscape is in constant flux, with new challenges and opportunities emerging rapidly. Emerging markets and interconnected global finance, along with rapid technological advancements, reshape the economy. The U.S. stock market adapts and thrives in this evolving landscape. Its deep capital markets and culture of innovation provide a solid foundation. The diversified U.S. economy, with strengths in technology, healthcare, finance, and consumer goods, offers resilience against economic shocks. Investors, by embracing a long-term perspective and thorough research, can benefit from the continued growth of the U.S. economy. A legacy of growth, a future of promise. The U.S. stock market's enduring success is a testament to American ingenuity, its commitment to free markets, and its ability to adapt and innovate. This legacy of growth, built on hard work and risk-taking, continues to inspire confidence in investors worldwide. The fundamental drivers of the U.S. stock market's success, innovation, entrepreneurship, and a commitment to shareholder value, remain as relevant today as they were decades ago. Investing in the U.S. stock market is an investment in the American spirit, a belief in its ability to overcome challenges and create a brighter future. It's a vote of confidence in human ingenuity and the pursuit of progress. The U.S. stock market stands as a beacon of opportunity for investors.